Hey, good evening, everybody. I hope that you are all doing well. I've missed you as well. Today's date is now August the 16th. It's a Friday. It's about 8 p.m., but it doesn't matter if it's Friday. It doesn't matter if it's a Monday. It doesn't matter if it's a Wednesday. We are going to be here to put in this work to try to understand the market, to try to keep up with it. This way, it's going to allow us an opportunity to capitalize as much as possible, especially from the perspective of a day trader. So I'm finally back from vacation. I was in Istanbul, just kind of touring around with a friend, and also in Antalya for 6 days. I'll be working here every single day without a day off till about September the 5th. And then I'm off to Poland for about 5 days. And I'm really looking forward to another vacation. So, everybody, welcome back and thank you for joining me. My name is Philakone. If you have not been with me for a long time, or if you've just been new to my channel, welcome. I'm a day trader and investor of 9 years now in the crypto space. I remember in 2015 when I was in my parents' basement with my little mining rig for Ethereum, when Ethereum was like under $1 for each one. And I had so much belief in Ethereum that I went all in on it. And now, 9 years later, with a large portfolio and also lots of people in my Discord group that count on me, I'm here to provide you with the best possible technical analysis and perspective in the market to give you an overall macro and micro view of Bitcoin and the crypto markets in general. So today, let's take a look at Bitcoin and see how we've been trending thus far. For the past 6 days since I left, I actually didn't look at the market much in any way. My goal is to always work extremely hard while I'm here in the office, keeping up with everything and also everyone. And then while on vacation, I kind of ignore the market so I can truly enjoy my time off. So this is one of the first days and times that I'm looking at the market, and I'm going to talk about the different methods of analysis that I use to get a gauge of how the market is doing. So as we all know, we have seen Bitcoin drop to the lows as I predicted. For all those that have been following me for a long time, you would know that my accuracy is incredibly high, even though many people will disagree with the opinions that I provide because they're usually so far out there in terms of being just wild, these predictions. I mean, when I'm predicting $48,000 Bitcoin, when Bitcoin is still around $70,000, that's going to panic the market a little bit. But as you can see here, Bitcoin actually hit $48,900 with flying colors. So the best way to take a look at the crypto market is always from a macro perspective on a high time frame, first of all. One of the first things that I always do is acknowledge the trend and the range that we're currently in. And ranges can be defined in many ways. For example, a sideways range like that, and especially a channel as well. And these channels that we see quite often, they can be indicative of how the market psychology is reacting to these trend lines. Now, they happen all the time, as you folks know. And for technical analysis, this is going to give us a gauge and a range of how investors and traders are going to react when it gets to these specific lines. Now, they're not always going to be perfect, but oftentimes you're going to find that the market does react fairly well to these particular lines that we see. So you can see right now that there's actually a channel that's formed. And sometimes we end up forcing it to make it fit within the confines of how it's going to look. But other times like this, they end up being beautiful. And you can see that anything above or below or outside of this channel ends up becoming a bull or a bear trapped region. And this channel has been formed for an incredibly long period of time now, since the high of March the 13th when we reached the Bitcoin all-time high. And it's now been about 144 days, which is about 5 months. So until we break this particular pattern, we're not going to see a definitive change in trend quite yet. So something needs to change in order for us to believe it's heavily bearish or heavily bullish. And one of the biggest factors that I see that has changed so far is something called the chandelier exit indicator. That's a very significant indicator because it measures the average true range, also known as a volatility indicator. It's very similar to other types of indicators such as the super trend that's going to give us an overall gauge of the trend of the market. And as we know, in a bullish market, the indicators would give you a bullish value. In a bearish market, it would give you a bearish value. And there's always going to be oscillation between these two, going up and down, green to red, red to green, etc. Now, ever since we hit the bottom after the major bear market began, all the way back in like November, December of last 2021, we can see that it's been red the entire time throughout. But then finally, when we hit a bottom and it broke to the upside, the volatility ended up changing. So because of that, it ended up becoming green for a long period of time. And this I think around here, August, that's when the SEC ended up around here is when the SEC denied the appeal or the request for an ETF approval for BlackRock. But you can see that around here is where it started to pick up again, because the SEC gave suggestions to BlackRock to make changes so they could get approved. And that's a very significant factor, which ended up causing this massive catalyst that led to the upside with the anticipation of the BlackRock ETF approval. And then we had a major bull run ever since then, where we had periods of ups and downs and major volatility especially. And we actually ended up staying green for about 290 days, which is a substantial period of time. That's almost 10 months, a little bit over 9 months. So you can see here that we finally broke to the downside the first time, okay? We see right here that it finally turned red. And there have been major periods where we all thought that the market was going to rally to the upside. But what we've got to understand is that the whales out there and the people with a gigantic amount of money, what they do is this is how they trap people into believing it's going to go to the upside. You can see the momentum where a crossover could have occurred. The crossover could have occurred. A crossover could have occurred. A crossover could have occurred. And during these moments, many people end up entering a long position before the breakout occurs. And unfortunately, that's how a lot of traps happen. People buy close to the breakout rather than letting the breakout happen first and then trading the continuation or adding on a dip after the major breakout occurs. So you can see that it looked like we were going to break to the upside right here and also right here based off of MACD. But this is where the whales end up dumping their positions, their longer term holds, or many short traders will also enter the market here as well, thus trapping many people. So we can see many times that it was just a catastrophe. And then the worst part about getting trapped is that once you realize your bias is wrong and you realize I'm on the wrong side of the trend, that what ends up happening is many people realize this at the same time or close to the same time, and then you're forced to sell and get out of your long position. And then when this happens, you add fuel to the fire to the downside, which can end up driving the prices significantly. So even though these people were long, they're now either short or they're dumping their positions. That's why when these traps end up occurring and people sell off their positions once they flip sides or exit their trade or stop themselves out or decide to go into a short instead of being in a long, a huge driving factor ends up occurring like this. Okay, so we see that there's been a series of red candles that just pushes to the downside. So if I had to make a prediction right now, one of two things are really going to happen. We're going to either hit 65K or we're going right back down, like around there, we'll just say, or we're just going to head to the downside and end up hitting maybe sometime October, just the lows over here, just to challenge it one more time. But if this doesn't hold and this channel ends up breaking, it would be very easy to see anywhere from even like $44,000 to $48,000 support again. So I'm going to try to keep this under 10 minutes just because it's the first day back. I don't want to overwhelm you with information, and there's a lot of information out there. So just some quick predictions right now is that Bitcoin is more so in a consolidation period where it looks like there's a chance to maybe even hit 65K somewhere up there or break to the downside. I know it's not exactly what you want to hear, but that's the most realistic thing to hear right now. We can see that, for example, the daily, actually let's go over the 12 hour. We can see that the 12-hour chandelier exit support has been holding now for 8 days. So really the prime support is above 56,900 right now. If we end up holding there, there's a possibility we're going to get back up to like 65, 66K sometime in August. But if this ends up breaking and the volatility ends up becoming bearish, there's no doubt in my mind we're going to get down to like 52 to 54,000 as a support again. So for now, because it's this crypto type of winter that we're having around the summertime, it's just not the best season to be trading, in my opinion. I think that weathering this storm and seeing it through and just continuing with your patience and your perseverance through these types of slow markets, it's going to allow you to focus more of your energy when better days do come. So from the perspective of Bitcoin, I'm on the fence right now. 56,900 is very significant to hold. If it doesn't, we're going to get down to 52 to 54K. If we do hold, we're going to get back up to about 65K. From the perspective of day trading with my advanced volatility indicator, we can see that there's a combination of red and green, but more so red than anything, where coins are slowly bleeding or going sideways. And there's definitely not any volatility either as well. There's only about 2 coins that are trending to the upside right now. So with that being said, there's not many day trading opportunities right now. So during a bullish market, I'd plan to be trading with a significant amount of capital, anywhere from $500,000 to $100,000 day trading, scalping positions, not long-term holds, not swings, just day trading like I've always done. And because of that, it gave me a lot of time to think about the specific strategies that I want to use. And you have to be very confident and sure with great risk management and patient and diligent, and also extremely disciplined with the types of trades that you take with a larger amount of capital. So because of that, I decided to create a brand new course, one that's not outdated anymore, which is going to be Philakone's course version 3.0, Mastering the Day Trading Markets. I think that it's long overdue because many of the courses that I have, they become outdated fast due to the fact that market conditions change so often. So my previous day trading course, it feels a little bit outdated, which inspired me to create something new. This course will consolidate all of my knowledge into a streamlined, easy to follow guide, starting from the basics and advancing to mastery concepts. It's going to incorporate and infuse many of the elite courses and also Discord group content that you've never seen or even heard before into a new course. So what's unique about this course is that it will highly specialize in 3 powerful strategies. And these 3 strategies, they're simple to understand but challenging to master, as their success depends on patience and discipline, and you must wait for the perfect setups. But the beauty of these strategies is that you don't need to have deep market knowledge to grasp them, but they offer an incredibly high probability of success when you find these actual setups. So this course is going to place a strong emphasis on how to identify these setups, and when you do, your chances of winning these trades are extremely high. So get ready to level up your game. This will be the longest course that I've ever made. It's going to be over 20 hours long. It's going to have about 31 lessons in it. I'm going to be extremely detailed, in depth, with lots of examples and also live day trades as well. And it's going to not be very similar to the older courses that I have. It's going to be brand new content that's condensed so that you can truly understand my focus and my goal in this upcoming bull market when I start trading. So I'm just going to wrap up the night. Thank you very much for joining me. If you enjoy my content, all you have to do is just subscribe to the channel and hit the like button and leave a comment below if you've truly enjoyed it. Thank you very much for your time. And for those taking the weekend off, I hope you have a great weekend. Bye now.